And welcome to my YouTube channel, The Unfolding of the Stock Market Crash. My name is Phil Grande, and this is October 15th, 2021. Well, we got the bank earnings, and we also got a bunch of nonsense. The fake Business News Network has taken such a spin on these banks to try to take parking space in our head that everything's all better. Everything's all better. Inflation's gone. Don't worry about it. Everybody's got their jobs back. Don't worry about, we got all the ports opening up and everything's going to be just wonderful. These banks prove it. No, the banks prove just the opposite, that the economy is going to get worse because the inflation is going to get worse. And what causes inflation? The government spending more money than it takes in. And we already see evidence of that. They're talking about spending another $5 trillion. What are you, nuts? No, the banks are showing just the opposite. So let's drill down to the banks so you can understand what's really going on instead of listening to these pack of liars. Okay. First, here's what they said today about the banks. Play it.
This quarter for banks, it's bull market banking. You have credit euphoria. Now, after the pandemic, banks have been a source of strength.
Really? That's not the truth. Let me explain. Okay, so let's take a look at, if you remember, if we go back, and what did government say? Let's close down, let's close the economy down right here. Let's close it down. Let's send everybody home. And what we'll do is send them checks. Let's keep sending them checks. This way we'll increase consumer spending. And remember, when you increase consumer spending, that grows the economy. Because remember, consumer spending is 72% of our economic growth. So they said, let's just keep everybody at home, keep sending them checks, and they'll go and spend, and our economy will grow. Well, something happened. Take a look down here. Well, when people stayed at home, they didn't spend. They took that money and they paid down their debt. That's right. Their debt, their credit card debt, their home improvement loan, their car loans, all their bills they paid down. Now that creates a problem for the economy because when you pay down their debt, and it creates a problem for the banks. When they pay down their debt, the banks, of course, get less interest income. When you pay down their debt, we get less consumer spending. That means less economic growth. So the problem is the banks were in a bad situation because of this. In fact, so bad that the government's been printing, the Federal Reserve's been printing $125 billion a month since 2018 to prop the banks up. So how do we get from that to, wow, look how great things are doing? Well, right here. What's happening is the banks, when they looked at their income, the income wasn't coming from the consumers, they said, because they're paying down their debt. So to make their income look larger than it really is, they took and reduced the amount of set aside for bad loans. Now take note, this is exactly what they did before the 2008 crash. Again, banks have a set aside for bad loans. With this tremendous inflation, a 13-year high, the banks are worried about defaults, and they should be. So they built up these reserves. But when the earnings started to come out this quarter, they need to show everybody how the economy's doing great, especially the Federal Reserve. The economy's doing great. So they decided if a bank was making $2 million profit, let's say JP Morgan, we'll just use that number, but they need to get to $5 million, what'd they do? They went to the set aside, and let's say they had 10 million, they would drop it down to 8 million. Take the 2 million, shift it over to the bottom line, and all of a sudden profits would go up. This is the only industry that can do that. So their profits look better than they actually are. Now, where are the profits coming from? When you go and drill down, they're coming from mergers and acquisitions. That's where all the big fees are coming from. The fees are coming from the trading. There's so much trading in the market and everybody's trading. That's where their fees are coming from. Is that bad? No, not at all. But that's not how you build an economy. You build an economy through consumption, through productivity. And the biggest mistake they made was they changed the monetary policy from printing to productivity to consumption to printing and spending welfare. So I could not believe what they were selling us, how these banks were proving the economy is doing great and it's just ready to boom again. Just the opposite. Boy, I wish I could set aside and shift it over to my bottom line and say, oh, I made, instead of 5 million, I made 8 million. I'd be in jail if I did that. Before I leave, I want to show you something that's going to save you, I hope, some heartache. If you're going to listen to them and tell how great things are, make sure when you're buying stocks, make sure you're staying in stocks that only have what we call big uptrends, okay? Like this wonderful bank here, PJT. See this nice up income, or see the trend up here? That's what you want. You want uptrending stocks. That means the flow of money is going in. That's what you look for. Stay away from those stocks that you're addicted to, like Amazon. Everybody's buying Amazon today, right? But Amazon, the problem with Amazon, you have a downtrend. Means money is flowing out. Yes, the stock price is going up temporarily, but it's going to fail. Remember, when you buy a stock, you want the trend to be going up as the money goes up. If the stock goes up while the trend of the money is going down, it means it's going to fail. So please, whatever you do, whatever stock you buy, and I know a lot of you are addicted to tech stocks, stay with your stronger tech stocks like Xilinx with an uptrend, okay? Or one of my favorites, Tesla, with an uptrend. That way you won't get in trouble. Stop listening to this nonsense. Listen to what I'm telling you. It's the truth. Join my gang free for 10 days. By the way, please subscribe, hit like, and share. I'll see you on the charts.